Hello learners, welcome to our session today. I am your instructor, CPA Aringo Frederick. In our session today, my good students, we are looking at advanced management accounting, and the concept that I want us to study today is very important. This concept is also applicable for the students who are doing QA, for the students who are doing quantitative analysis. And the concept that we are looking today is under decision theory. The concept is under decision theory. The concept is under decision theory. And we will be looking at the concept of decision tree. This is what I want us to talk about. Decision tree. Decision tree. It is a very important concept and also one of the simplest concepts if you'll be able to understand some of the key elements under decision tree. So up to now, I know you are very familiar with what we did earlier on. We looked at the concept of expected monetary value. We had also talked of the concept of maxi-max decision rule. We had looked at the aspect of maxi-min decision rule. We had talked of the aspect to do with minimax decision rule. So all these concepts, you'll find that they almost relate to what you are going to look at in our class today. So if you can recall the concept of expected monetary value, whereby we were having our payoffs and you're having our probabilities. So it was upon us to determine the expected monetary value, the average of all this. And in that case, we were using probabilities and our payoffs. So the same concept that we had looked at under EMV, it is the same concept that we are going to look at under decision tree. So in our decision tree, we are going to represent our decision alternatives and the state of nature as if they are in a form of tree. It's kind of this is a graphical display of the decision alternatives and the state of nature as if they are in a form of tree. This is what you are looking at, and this is what we are terming it as what? As decision tree. So you'll find that is a concept that if you look at it in a deeper perspective, you'll find that it is very sweet and it's very fun for us to work it out, right? So the first thing that I want us to do is to introduce this concept of decision tree, see what it entails, and from there on, it will be very easy for us to go forward. So looking at a decision tree, maybe just defining it, we normally tend to say that a decision tree is a graphical display of various decision alternatives. And I want you to listen there very careful. We are saying that a decision tree is a graphical display of various decision alternatives and the sequence of events as if they were in a tree, as if they were branches of a tree, So this is what we are terming it as what? As decision tree. A simple definition as that a decision tree is a graphical display of decision alternatives and the sequence of events as if they were branches of a tree. That is a decision tree. Now, key element that you must always grasp anytime you are looking at decision tree are the nodes that you normally tend to use to present the decisions, alternatives, or to present the state of nature. So, having mentioned that one, these are the nodes that are very important for us to always understand. The symbols for decision tree. Talk of these symbols, they will highly assist us going forward anytime we'll be looking at what? Anytime we'll be looking at decision tree. So this symbol of ours, we normally tend to look at the following. We normally tend to talk about this symbol. This rectangle will represent what is known as decision node. Decision node. This is decision node. And probably a person will ask, Mwalimu, when you are talking of decision node, ideally, what do you mean? So decision node, ideally, these are just points where choices exist between alternatives. These are points where choices exist between alternatives and the managerial decisions. So when you are saying that, maybe I'm having an option, maybe just to explain to you, like at this point, whenever I'm talking of this node, relating it to the concept of EMV, the one that we did, right? We are looking at it in a case whereby we are saying that at this point, maybe I'm talking of, I'm having an option of either to sell our product at 20 shillings. I can sell our products at 20 shillings. We can sell our product at 30 shillings. Or we can sell our product at 40 shillings. So these are the nodes. This is what you're terming them as a decision node, whereby in that case we've said are points where choices exist between alternatives and managerial decisions So you'll find that at this point we need to make a decision of either I should sell my product at 20, 30 or even 40. So you'll find on a decision tree you can always represent it by that, or let's just have it as square. You can just represent it by that node. Then you have another node, circle, representing we have another node, circle, that will represent our state of nature node. So this is a state of nature node, or the outcome node. This is the outcome, this is the outcome node. This is the outcome node. Or at times you normally tend to term it as state of nature node. State of nature node, state of nature node, state of nature node. So you'll find that at this point, elaborating what I've just said here, I have to make a decision on either of the three alternatives, right? We need to make our decisions on either of the three alternatives. Now on these three alternatives, I'm having an outcome that can occur. If I select 20, there is an outcome. If I select 30, there is an outcome. If we select 40, there is an outcome. So you'll find that in this event, you're going to present it now with the outcome node, whereby in the event that I've selected 20, I can have a state probably where state of nature can be good, can be very good, or it can be poor. It can be poor, it can be poor, it can be poor. So here we have that decision node, right? Which I want you guys to mark it very correct. At this point, I'm having what? An outcome node, which in this case the state can either be good, very good, or it can be poor, or it can be poor. And the beauty part of it is that my good student should understand is that this node is always represented by the aspect of probability, because in this case we are very uncertain of what will come. So you'll find that they are always represented by the aspects of probabilities. So we are going to say that maybe there's that chance that state of nature will be good, maybe 0.5. There's that chance that state of nature will be very good, maybe 0.2. And there's that chance that state of nature maybe will be poor, there's that chance of 0.2. So we are representing this by the aspect of what? Probability. So anytime in your decision tree, anytime we'll be having this node, always have at the back of your mind is that what will follow is what? The outcomes and their probabilities. Outcomes and their probabilities. So this was very important for us to note when you are dealing with decision tree. Now, another concept, my good student, that we should understand is the aspect of steps that we need to follow while preparing our decision tree. This will also guide us very well. So that should take us to steps in solving problems with decision trees. So talk about steps in solving problems with decision trees. So we are looking at steps in solving problems with decision tree. 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 So you'll find that if we follow these steps, my good student, we will be in a very, very good position in handling any question for decision tree, as what we'll just see in this session of ours. So when we are dealing with the decision tree, this is the first step that you must always consider. This is the first step that you must always consider. First of all, we need to define the problem. What are we dealing with? So this is step number one. Define the problem. Define the problem. Define the problem. That is our step number one. We need to define the problem. Then step number two, what you must consider, my good student, is after we have defined our problem, we need now to come up with a structure of the decision tree. So we need to come up with a structure. Draw a decision tree. Draw a decision tree. Draw a decision tree. Or rather, we are coming up with what? We want to come up with a structure of the decision tree. Then step number three, we need to assign probabilities to the state of nature. Assign probabilities to the state of nature. Assign probabilities. Assign probabilities. Assign probabilities. Assign probabilities to the state of nature. Assign probabilities to the state of nature. Assign probabilities to the state of nature. That one is also very important. We need to assign our probabilities to the state of nature. Then step number four that you must always have at the back of your mind also when you are dealing with decision tree is, talk of our step number four. Number four, we need to estimate our payoffs. We need to estimate our payoffs for each possible. So we are saying that we need to estimate, we need to estimate payoffs, estimate payoffs for each decision, estimate payoffs for each possible combination, 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 for each possible combination of alternatives and state of nature, of alternatives and state of nature, and state of nature. So you need to estimate our payoffs. Because remember, as I've said, you need to relate this concept with what you did earlier on when you are looking at what? Expected monetary value. You just need to relate this concept with that. Then step number five, which is our final step, my good students, you need to solve the problem by computing expected monetary value. Solve the problem by computing the expected monetary value. Solve the problem by computing the expected monetary value for each state of nature node. For each state of nature node. For each state of nature node. For each state of nature, for each state of nature node. For each state of nature node. And I believe when you're talking about state of nature node, I'd clearly demonstrated it at that point. So these are the key concepts that you must always have in mind anytime we are handling decision tree. And you'll find it to be very, very simple, by the way. So to this point, my good students, I want us to handle an illustration question from our past paper. This illustration question will open our mind wide on what we will always be expected to do when it comes to decision tree. And if you follow the same procedure, and the main thing is kindly try to understand the whole concept. You know, at times students, they normally tend to say that decision tree is hard. But it will be hard if you are cramming. It will be very hard if you are cramming. But if you try to understand the concept clearly, you'll find decision tree to be one of the simplest concepts that you'll ever have. So this is our question, a question that was tested in our past paper. And this question is going to come from May 2017. This question, I've shared it there on the screen. You can clearly see it. You can clearly see the question that I've shared. The question was tested in May 2017, question number 1. That is a question that I want us to handle in our class today. I've shared the question. I want you guys, if possible, you can take a screenshot of that question so that that question will assist us to understand this whole concept of decision tree. That concept will assist us to understand the whole concept of decision tree. It will assist us to understand the whole concept of decision tree. So this is what we are told. Let us go through that question together. Let us go through that question together. May 2017, question number 1. This is what we are told, that Furahia Limited, an events management company, is considering whether to advertise an outdoor concert. The sale of tickets is dependent on the weather, as indicated below. The sales of tickets is dependent on the weather, as indicated below. So this is what you are told. If the weather is poor, it is expected that 5,000 tickets will be sold without advertising. That is, if the weather is poor, it is expected that 5,000 tickets will be sold without advertising. There is a 70% chance that the weather will be poor. Now, my good students, if there is a 70% chance that the weather will be poor, what is the chance that the weather will not, or rather that the weather will be good? I'm given that there is a 70% chance that the weather will be poor. The question is, what is the chance that the weather will be good? I know you can get that one, which in that case will be having what? 30%, right? Proceed to the next point where we are told, if the weather is good, it is expected that 10,000 tickets will be sold without advertising. At any given point, if the weather is good and I've done nothing, still I'm going to sell 10,000 tickets. And we are told that there is a 30% chance that the weather will be good. So in the event that the weather is good and I've just done nothing, I haven't done any form of advertisement, or rather I've done advertisement, or in that case I haven't done anything, you'll find that I'm going to have a ticket sales of 10,000. Note 3, we are told that if the concert is advertised and the weather is poor, if the concert is advertised and the weather is poor, there is a 60% chance that advertising will stimulate further demand and ticket sales will increase to 7,000. That is in the event that we've done advertisement. In this case, at that point you'll find that the weather is poor. I've done advertisement and the weather is poor. There's that chance that this advertisement will stimulate our demand by 60%. And if it will stimulate our demand by 60%, our ticket will increase to 7,000. The question will be, my good students, first of all, what is the chance that this advertisement will not stimulate our demand? Under the condition our weather is poor. Of course, I'll be having what? I know you can get that one correctly. We'll be talking of 40%, right? So, if that chance of 40%, it means that our advertisement will not stimulate our demand. And therefore, our ticket sales will still remain to be the same as if we've not done any form of advertisement. Which was, at the weather which was poor, we had how many tickets? 5,000 tickets. Look at note number 1, right? Then, the other dash we are told, if the concert is advertised and the weather is good, there is a 25% chance that advertising will stimulate further demand and ticket sales will increase to 13,000. Look at that very careful, my good students. If the concert is advertised and the weather is good, there is a 25% chance that advertising will stimulate further demand and ticket sales will increase to 13,000. That is in the condition that my weather is good. We've done our advertisement. There is that 2.5 or rather 25% chance that this advertisement will stimulate our demand. So what is the chance that this advertisement will not stimulate our demand? Of course, I'd be having the difference, which will be 75%, right? So there's that chance that advertisement will not stimulate our demand. And if it will not stimulate our demand, our ticket sales will remain to be of how many units? I'll only be talking of what? 10,000 units. 10,000 units. In that event that advertisement has not stimulated our demand. Go to the next point here. We are told that the profit expected before deducting the cost of advertising at different levels of ticket sales are as follows. The profit expected before deducting the cost of advertising at different levels of ticket sales are as follows, where in that case I'm given like that, right? Number of tickets sold and I'm having our profits, correct? Then in this case you are told that number of ticket sales I'm given, and then you are told profit I'm also given there. The cost of advertising the concert is expected to be 15 million. In the event that we proceeded and we've advertised, I'm going to incur 15 million. Required, using a decision tree, advise the management of Urahia Limited on whether the outdoor concert should be advertised. My good students, you are given 12 marks. I think in that case, the examiner wanted us to pass that paper, right? The examiner wanted us to pass that paper. So kindly take a screenshot of that so that we can proceed. Kindly take a screenshot of that. We've said that one is May 2017. If you have the paper, you can check it out. Advanced in May 2017, question number 1. So that's our question. That's our question there. That is our question there. So in this case, we are looking at decision tree. The examiner wants us to advise, of course, this company on whether they should do what. That should be the first question that we're going to ask ourselves. This company, we are told under this required that we need to advise the company. We need to advise the company. Look at that case. Using a decision tree, advise the management of Urahia Limited on whether the outdoor concert should be advertised. So my good students, what I want you to mark and grasp very correctly, in such questions, the first question that you're going to ask yourself is your decision alternative. In this case, what do you need to do? Defining the problem. Defining the problem. What are we expected to make decision on? So that should always be the first question that you're going to ask yourself. In our case, we need to decide whether we should advertise or we should not advertise. That is our decision that you want to make, which in that case we mentioned is going to be represented by this node. A decision node is going to be represented by a decision node. We want to make this clear. We need to know, or we need to make a decision on whether we should advertise or not. So we need to make a decision on whether to advertise, or not to advertise. So in this case, we need to make this decision on whether we should advertise, on whether we should advertise, on whether we should advertise, or not to advertise, or not to advertise, not to advertise. I need to make that decision on whether we should advertise or we should not advertise, on whether we should advertise or we should not advertise. So after mentioning that one, if we advertise, my good student, believing you have that question, if we advertise, I can have this state of nature. If we advertise, first of all, if we advertise, I'm going to incur a cost of 15 million. let us take our figures to be in thousands. If we advertise, I'm going to incur a cost of 15 million. Our figures are in thousands, okay? Then, if we don't advertise, I'm not going to incur anything. If we don't advertise, I'm not going to incur anything. Then, talk of what? If we advertise, we have state of nature, things that we can't control. Things that we can't control. And this state of nature, we were given the weather. So, I can advertise and probably the weather can either be good or it can be poor. So, I'm having a state of nature node. I'm going to advertise, and on this advertisement, my weather can either be good or poor. It can either be poor or good. It can either be poor or good. If we advertise, our weather can either be poor or our weather can be good. So, what is the probability that our weather will be poor according to what you are given, my good student? My good students, according to what I was given, what were we given? The chance that the weather will be poor. In that case, you can clearly see I was given 0.7, right? And the chance that the weather will be good, in that case, I was given 0.3. Correct? I want to just go step by step. We are going step by step for us to understand this concept clearly. Okay? Then, on that note, I was told, if the weather is poor and I've advertised, in this case, you'll find that the weather can either, or rather, that advertisement can either stimulate our demand, or there's that possibility that it might not stimulate our demand. So I'm having an outcome here again. We've done our advertisement, the weather is poor. And at this poor, and we've done our advertisement, that advertisement can either stimulate our demand or not stimulate our demand. So we're having again the nature here. So in that case, this is what we do have. The advertisement and the weather is poor, it can either stimulate our demand, it can either stimulate, representing it by S, or not stimulate, not to stimulate our demand, representing it by NS. Representing it by NS, representing it by NS, representing it by NS, representing it by NS. So, if my weather is poor, we've done that advertisement, and the advertisement has stimulated our demand. What is the chance that this advertisement will stimulate our demand, first of all? We were given that question. I can still share that question so that all of us, we should be on the same page. All of us, we should be on the same page. I want you guys to look at note number, dash number 3. If the concert is advertised and the weather is poor, there is 60% chance that advertising will stimulate further demand and ticket sales will increase to 7,000. So I'm having what? 60% chance. So our weather is poor. There's that chance that it will stimulate our demand, and that chance is 0.6. And the chance that it will not stimulate our demand, therefore, it should be having the difference, which is 0.4. And if our advertisement has stimulated our demand will shoot to 7,000. And the weather is poor. The other good question that you need to ask yourself is, what if it has not stimulated our demand? Will our ticket sales change? It will not change. It will just be the same as if we've not done any form of advertisement. So our ticket sales will remain to be how much? Under condition of poor. I want you guys to look at this note number 1. Look at note number 1. I've shared the question with you guys here. Look at note number 1. If the weather is poor, it is expected that 5,000 tickets will be sold without advertising. So in this case, you are saying that, yes, we've done advertisement, our weather is poor in that case. Even without doing anything, our ticket says we can sell under condition under the weather of poor. The ticket says that you can sell is 5,000. The ticket says that you can have is 5,000 units. So in that case, you are done with that first bit. The other component to consider, my good student, is here. My weather is good. If my weather is good, that advertisement can either stimulate our demand or it may not stimulate our demand. The advertisement can either stimulate our demand or it cannot stimulate, it may not stimulate our demand. Not stimulate. The weather is good. What is the chance that advertisement will stimulate our demand? We are given there, and in this case, we are given a figure, we are given out percentage. Look at dash 4. If the concert is advertised and the weather is good, there is 25% chance that advertising will stimulate further demand and ticket sales will increase to 13,000. 25% chance. So we are talking of 0.25. 0.25. It will stimulate our demand. 0.75. It will stimulate our demand. So we are looking at it in that case. At this point, we've done our advertisement. My weather is good. Advertisement has stimulated our demand, 0.25. And if it has stimulated our demand, we've been told that our ticket sales will increase to 13,000. It will increase to 13,000 from what? In the event that we've not done any form of advertisement, our ticket sales, even without advertising, and the weather is good, we had how many units? 10,000 units, right? So the impact would be like, yes, I've done this advertisement. It has not stimulated our demand. So our ticket sales will just remain to be the same. Of how many units? 10,000 units, right? 10,000 units. 10,000 units. So we are done with that bit. Now, in that event, we've looked at that branch of advertising. What if, in this case, we are looking at the branch of, we've not taken that decision of advertising? If we've not advertised, I can either have two conditions. I can either have two conditions, and these conditions are poor, which probability is 0.7, or good, which probability is 0.3. And we have our ticket sales. If the condition is poor and we've not done any form of advertisement, I was given 5,000 units. If it's good, I've not done any form of advertisement, you're given 10,000 units. So that is what we have to do, my good students. We have to prepare our decision tree using the data that I am given. We've come up with our decision tree using the data that I was given. Now, we want to advise this company using decision tree. And this is where it is very important also to note the concept of EMV, expected monetary value. So we need to roll it back. We need to come back up to the decision of advertising or not to advertise. So we are rolling it back. Roll back technique. We are working backwards. Roll back, roll back, roll back, roll back. We are working backwards. We need to arrive at our decision alternatives here. Based on what? Based on our payoffs. So the question will be, were we given our payoffs? That's a question that we should ask ourselves. At this ticket sales level, were we given our payoff? Or is there a way that we can determine that one? Let us look at our question here. Let us look at our question here. So in our question here, my good students, you can clearly see that we have that data. Right? We have that data just below the notes where we are told the profit expected before deducting the cost of advertising at different levels of ticket sales are as follows. So that is the data that I'm given. I want us to use it. So when my ticket sales is 7,000, which figure are you seeing? What will be our payoffs if our ticket sales is 7,000? we can clearly see that we have what? 35,000, right? Being our profit. If our ticket sales is 5,000, if our ticket sales is 5,000, what were we given? You can clearly see you can clearly see we are given a loss of 20,000, right? A loss of 20,000, correct? If my ticket sales is 13,000, you can clearly see I was given a profit of how much? Our payoff will be 150,000. I believe you can see it like that. I believe you can see it there. So continuing with this. If my ticket sales is 10,000, you can clearly see here I was given a figure of how much? 90,000 being our payoff. 90,000 being our payoff. If our ticket sales is 5,000 here, we can clearly see I'm having negative 20,000. And if our ticket sales is 10,000, you can clearly see that you are given 90,000. So those are our payoffs. These are our payoffs. These are our payoffs. Now I want us to work backwards. I need us to determine our expected revenue if I have advertised and the weather is poor. I need to determine the expected revenue here. So what are we going to do? I am going to take these two, my good students. I'm going to take the two. We are going to have 35,000 being our profit. We multiply by the probability that demand will stimulate, or rather advertisement will stimulate our demand, which was 0.6. So by 0.6. We add the other branch, which in this case I'm having negative 20,000 by 0.4. Negative 20,000 by 0.4. That should give us how much, my good students? You have your calculator with you guys there. So give me the figure. What will we be having? We should be talking of 35,000. We multiply by 0.6. We are going to add minus 20,000. We multiply by 0.4. In that case, I'm having a figure of 13,000. I don't know if you guys are getting the same figures or mwalimu anapata vitu zake. So I'm getting 13,000 there, right? So that 13,000, I can confidently come and say, at this point, I'm having 13,000. At that point, you do have 13,000. We do have 13,000 here. Well, if I have advertised and my weather is poor, the expected revenue that I can have is 13,000. What about at this point if my weather is good? The same procedure will apply, my good student. The same procedure will apply. We are going to take the 150,000. We multiply by 0.25. We are going to add the 90,000. We multiply by 0.75. So that should give us a figure of how much, my good students. That should give us a figure of how much. That is what we need to determine. So in that case, we should be talking of 150,000. We multiply by 0.25. We are going to add 90,000. We multiply by 0.75, which in that case, I'm having a figure of 105,000, right? So you do have 105,000. After we have determined that one, my good students, the next element will be what? I need to determine, so here we can clearly agree that we are getting 105,000. We are getting 105,000 here. We are getting 105,000 at that point. When I have done my advertisement and my weather is good, the expected revenue that you can have is 105,000. The next bit will be, I need us to determine our expected revenue. I have done my advertisement. What will be my expected revenue after we've done our advertisement? So my expected revenue, I need us to achieve this point here. And how will we achieve it? We are going to take the following. Expected revenue here is 13,000. The chance that the weather will be poor is 0.7. We are going to add the expected revenue if we have advertised and my weather is good is 105,000. The probability that the weather will be good is 0.3. 0.3 here. So I'm having 0.3. So that as at the end of the day, what will we be having here? What will we be having at that point? So this is what we are going to have. We are going to take the 13,000, we multiply by 0.7, we are going to add the 105,000, we multiply by 0.3, that should give me a figure of how much, my good student? 4,600. That should give us 40,600. 4,600. That should give us a 4,600. So I can confidently come and have here my figure of 40,600. We've done our advertisement. My expected revenue, the expected revenue that you can have is 4,600. But remember, when we were doing advertisement, there is a cost that I was incurring. And this cost was how much? The cost that I was incurring if we do advertisement, I was incurring 15,000. So my expected revenue of 40,000 will less 15,000. How much will we be having? So minus 15,000. So that should give us 25,600. So in the event that we've done our advertisement, I'm going to earn a revenue of 25,600. This will be the revenue that we are going to earn if we've done our advertisement. If we've done our advertisement, the net revenue that we are going to earn in that case out of this project will be 25,600. What about if we don't do any form of advertisement? What will be our net revenue? That will be very simple, my good students, because we are going to take the loss of 20,000 minus 20,000. We multiply by 0.7. In this case, we are going to add the 90,000. Remember the 90,000 here, our income. We multiply by 0.3. We multiply by 0.3. So that should give us a figure of how much? That, my good students, will give us a figure of minus 20,000. We multiply by 0.7. We are going to add 90,000, my good students, we multiply by 0.3. So in that case, I can clearly see I'm having a figure of 13,000. We do have a figure of 13,000. So that will be my revenue here. We are going to have our expected revenue if we don't advertise. In this case, I should be talking of what? The aspect of 13,000. And the question that we are going to ask ourselves is this. If we don't advertise, is there any cost that you are going to incur? There is no cost at all that you are going to incur if we don't advertise. So that means that at this point, I'll be having 13 minus 0. Remember here we got 25,600 by taking the expected revenue, which was 40,600. We deducted the 15,000, the amount that I was incurring. So that's how we arrived at 25,600. At this point, I'm having the 13,000. If we don't advertise in expected revenue, we don't have any cost that we are incurring if we don't advertise. So therefore, my expected revenue will be 13,000. This will be our expected revenue. That will be our expected revenue. Surely, if I may ask you, if you are to advise this company, what do you think? Should they advertise or should they not advertise? If we advertise, I'm making a revenue of 25,600. If we don't advertise, I'm having a revenue of 13,000. So what advice will you give to this management? That one, I'm leaving it to you. So for more of these videos, my good students, you can get all these videos in our phone application. And also for those students who are doing the exams in August, August is very near. So if you've not downloaded Mdarasa, if you've not joined our live virtual classes, it's not too late. Still, you can join. And for any information, of course, you can always contact us using the number below this video. And we'll gladly be there to assist you guys. Thank you so much, and let us meet in our next session whereby we are going to handle another question which was tested in 2018. We are going to handle another question for decision tree which was tested in 2018. Thank you so much.